Hello, good morning. So we are back with our new stream. Yesterday, it was quite rough, but price went exactly as as we forecasted because we told this buy sell side liquidity will be taken, and it's took already in this morning, and the smart money was here. Price yesterday night went here and took the orders, mitigated and went down and took this liquidity. So we still have pending liquidity here. This one, um, hold on a second. We have pending liquidity here. So price will eventually today, most probably today, it will take this liquidity, and so let's go to the 3 days time frame. 3 days time frame. It's pretty bearish. See all these candles. Price is not filling, is doesn't bother to fill this fair value gap, so that means price is going to take some liquidity here or here, or maybe even here, we don't know. So let's go to the 1 month first. 1 month price went to this fair value gap, and hold on a second please. Let's highlight the cursor. Let me highlight the cursor so you can, it will be easy for you to follow this thing, follow the cursor, and so yeah, here it is. So I highlighted my cursor. So here price, let's analyze the price, right? So the price is, let's take 3 months. We don't need this much long time frame, but we still take it for for this purpose. So here in 3 months we have a bigger fair value gap, and price failed to close above this 50% of this fair value gap. That means that's a bearish sign in long term perspective. It's really long term because this is 3 months time frame. So let's go to the 1 month time frame. In Let's again go back to the 3 month time frame, and this is a bearish engulfing, and price took tapped inside this fair value gap. So let's check the body. Price is failing to get to the 50% of this order block, so it's a bearish sign. It's clearly bearish sign. So I think the dollar is going below this, at least in this discount area of this range. So in the long term, of course, and let's go to the 1 month time frame. And 1 month time frame, there is price in this order block, I mean in this fair value gap. price failed to reach Price failed to reach the 50% of this fair value gap, and it's giving us bearish engulfing. It's only, there is only 2 or 3 days to close the monthly candle, so that's a pretty bearish signal, and it's creating an inversion FEG here, but we need to close this month candle to confirm it. And let's analyze the order flow. Price came, it took this high, came back, it took the highs and lows, and then price failed to reach here. Again it came to the discount, again it came to the discount, and again it made a rally, and from this fair value gap, price attempted a run above this buy side liquidity. But this, if this fair value gap should, it's a, if it the intention of this fair value gap to take this high. Actually, what does the fair value gap do is, when the price run above the buy side liquidity, it create fair value gaps. Then the price come back to the rebalance, and actually it's not. Let's argue. We can argue that this fair value gap, it's not in the discount. It's kind of in discount if you count the body to body, the Fibonacci. So if this fair value gaps is powerful, it must have pushed the price above to take this liquidity, because that what the fair value gap does, right? It, when the price come to the rebalance to the fair value gap, it again pushes the price to cover the buy side liquidity that made before that. So it should have pushed, this fair value gap should have pushed the price to this buy side liquidity. But this fair value gap, even though the bodies closed above this fair value gap, all this fair value gap body did close above, price got a failure to push above. But we need, for that confirmation, we need a monthly candle close this month within 2 days. So as far as now, I can see like this is bearish price action, because this fair value gap is also failing to close, to hold the price. But we need more confirmation. So let's come to the 1 week time frame. In 1 week time frame, here price had a serious close down below. Then what happened? Price didn't even reach this fair value gap, didn't even reach there, but took all this liquidity, and price is on the way to the discount. So that's kind of bearish sign. At least it have to reach this. At least it should reach this, the discount of this leg. So it's now in the equilibrium. Let's see how the price will react from here. And on the way, there is not even a single big fair value gap. Only small fair value gap, and one is filled. And in the extreme discount, there is one fair value gap. That's the only sign we have right now. So I think the price is bearish. It's pretty much bearish as far as now. Let's see then. And for 3-day time frame, I told there is a fair value gap failure. Price didn't tap this fair value gap. That's a bearish sign. And let's go to the 1-day time frame. 1-day time frame, the smart money took here, then the fair value gap it's failed to close, and it had a tap in the fair value gap, and from there it is reacting here. Smart money is here. So now on the daily perspective, smart money is here based on the order flow. But if we take this liquidity, then price may run above all these smart money points. Okay, as far as if before this taking this liquidity, price can react from this order block to take the sell side liquidity. Okay, so let's go to the 13-hour time frame. 13-hour time frame, pretty much the same, but there isn't any significant fair value gap here. So most probably the price will take this liquidity 102.948. So let's go to the 6-hour time frame. 6-hour time frame. There is a volume imbalance here. Price opened here. So let's see. Let's go to the 4-hour time frame. 4-hour time frame, price covered the volume imbalance. Here the volume imbalance is here. And where's the smart money? Smart money in this time frame, it came from here, Now it's here. So there is a fair value gap here. So price may be reaching to that fair value gap most probably. And 6 hour time frame, 6 hour time frame, there is no fair value gap. 3 hour time frame, there is a fair value gap. 90 minutes, 90 minutes also there is a fair value gap, and also there is an inversion. Also there is an inversion here. So let's see how the price react. Okay, so 90 minutes the price is already tapped it and took the sell side liquidity. So it will take the, it will tap the fair value gap again, I think so. And let's go to the 6 hour, 3 hour. 3 hour there is an order block, there is a breaker. If it's not breaker, I think it's mitigation block because it didn't take any liquidity. So let's see. Yeah, price should at least come here. Let's mark the CE. Breaker CE, right? Okay, right. Breaker CE. Okay, I think the order block CE is also near. So let's go to the 30 minutes. 30 minutes. There is a failure to tap in this fair value gap. That means it will take this highs. It will take this equal highs plus it's a fair value gap in the high time frame. So it will tap. It will definitely take those highs. And the order flow, there is a failure for this fair value gap. It didn't tap, so it will take. That's a algorithmic signature that it will take. Thanks to Trader Tim. If you have time, visit Trader Tim YouTube channel. This guy gives awesome, tips for the from the ICT contents. So all credits to Trader Tim. So let's go to the 15 minutes. 15 minutes. The order flow is pretty good. Smart money is here. Then smart money take the pattern from here, and then it went high, right? So any retracement here, the price will go here. Okay, so that's all for now. We need to take the buy side liquidity here. Buy side liquidity. Price reaching for buy side liquidity. Liquidity. That is STF FEG. So that's it. So let's go with the, let's watch some podcast until we get a good entry. Okay, thank you.
It starts to do too much, because that happened to me last year, where I remember I saw like someone posts a big payout and I'm like, damn, I only made like $5,000 for the month. And then I was starting to think, like, you know what, I just got to size up, and I blew my account, one of my funded accounts during that month, trying to kind of hit a leaderboard or something like that. So it is very important not to kind of get ahead of yourself and just incrementally start to, you know, size up. And also the best way to size up, just get more funded accounts, because you can keep the same risk on. And then just by access of more capital, you'll have a lot more success and more money will come through.
100%.
Yeah, you're going to like just slowly expose yourself to the risk. Like when I first started, cause I talk about it a lot, my career, I started out in construction, right? I started out on small projects and then I kind of worked my way up. But when you get, you know, once you get, you know, a 500K project, at the time, that's a huge project to you. But then when you start getting to like 5 million, 10 million, 25 million, you're like, all right, it's like the same, it's literally the same process managing that project. It's just on a bigger scale.
Yeah.
Right.
But then obviously imagine if you went from, say, a 500K project to a 25 million.
It's just like it's a muscle you have to build. I think, you know, Real Gene talks about it. Like, I think when you go to the gym and you try and back squat how much he's back squatting, like you're gonna break your back, you know? So like, it's the same way when you scale up incrementally. You know, it's a lot safer and it's healthier for your like equity curve.
No, definitely. So I feel like the balance there is not trying to compare to others, but also you can use others as a source of inspiration and sort of to negate the complacency that comes in when you are starting to hit certain numbers and certain levels. When you're seeing these people above you, you don't want to compare to them, because then that can be a negative impact. But if you are able to say, okay, this person's achieving this.
Yeah. Like, how does he think, right?
Yeah, exactly. And, you know, what's interesting is you touch on, obviously, you know, the capital and the different payouts and stuff. How did you guys, in terms of like risk, because a lot, you've got the funding there, 7 figures as well. How are you managing the risk with those sort of size accounts?
I mean, for me, like I'm doing like 0.25% across pretty much the board, and I try and pyramid in. Like at times when it's like an A+ setup, I'll size up and do like 1%, as long as my initial balance is, you know, I'm kind of close to my initial balance where I have a buffer. Okay. Like if I'm going in a drawdown, I kind of play it safe.
Of course.
You know, I kind of size down. But I know you guys talked about it, like maybe it's best if you kind of split up all the capital, right, and trade them differently. Like I've thought about that too, right? But it is more management. Like it doesn't work. No, yeah. So it's all one pot that I'm looking at it. Yeah.
How do you handle it? Is there any challenges that come with that?
ഷെയർ ചെയ്യൂ കൂടുതൽ ഓഡിയോ പുതിയ 20 രൂപ പാക്കിനൊപ്പം.
At times, right? Like, because if I'm taking a loss on one, I'm taking a loss on all of them, right? But for me, it's a lot simpler because I'm just following one pair. You know, if I'm in one trade, I don't have to follow one setup. If I try, I mean, I talked with somebody about it over the weekend when I met in Miami, and he said, you know, I kind of want to think about it as if I have all these funded accounts, maybe this week I'm just going to trade this account, and then the following week I'll trade this account, right? If I take a loss in one account, now I can use the other account the following week, even if I'm on a losing streak. I can still possibly, you know, manage a payout from that one account while I kind of, you know, crawl out of that drawdown period, which is interesting. I mean, there's a million ways that you can manage the capital, right? It's kind of how you know, whatever makes you comfortable, really.
No, definitely. But it sounds really good. And, you know, as you say, it's there is no right or wrong way. That's what makes sense to you. So it's interesting. Have you ever had any issues in terms of, you know, having a copier on that many accounts? Any issues? No. Which copier do you use?
Solo Trader tool.
Yeah, I've always used. Yeah, it's a good one.
I think at times though, I think the platform's gone down. Like,
oh really?
Yeah. Only for like a small period of time. Like all the accounts will disconnect. And you're like, oh, what's going on? But it's usually right around like the rollover period, like the end of day close. Like they may be updating their software or something.
Maintenance.
Yeah, you could always go on. Like I always didn't have any issues with logging into MT4.
They normally email you, don't you? Yeah. I remember using social trader tools and you just get all these emails.
Oh yeah. I had
trade close.
I know, yeah. Especially if you're over traded, man.
It's like 1,000 emails. Oh man, that's crazy. But yeah, it's really good to hear. Really good to hear. And how about you guys then?
Well, for me, I try doing it all at once, but the thing is, I like to get paid every month. So even though I can make more money combining it all together, psychologically, it just feels better to get paid every month, even if it's less. I don't want to go through a period where I'm down, and then I might rush myself to just get back to break even to make some profits for the month if I didn't even make any money. So with having different accounts, I'm able to place a trade here. Sometimes there's riskier trade setups, and if you haven't traded for a week, you might just feel inclined to take it. So then I'll just throw it on one of my side accounts. But I have a main account for A+ trade setups. I risk anywhere between 0.5% and then 1% once I have a 2% buffer. All my accounts are traded differently, but all I know in the end is I'm getting paid mostly every month, and that's all that matters. to me.
That's good. No, it's a very similar approach to like his friend that where they kind of have an account every single week. Because for me, but not like I don't have it down to a complete science where it's like every single week. It really depends on how the account's going, like or the type of week that we're kind of going in. So if I know it's like a heavy news week, right, and I'm trading an account from the starting balance, right, I'm gonna take it a little bit easy. If the account goes into drawdown, it's no problem. But the following week, let's just say, okay, that account maybe is like down 1% or whatever, maybe down to 1.5%. I have the second account just so I can get a payout, like the friend that was saying. So that way, because think about it like this: if you start it all at one, and I've done this before with my FTMO accounts because I had like two 100K accounts. I had a 200K account last year, and then when they were all in the copier, and it just added so much psychological stress if I was down 1% because it's like, all right, my payout isn't in a week. You know what I mean? So it's like I kind of have to like trade out of drawdown, and it forced me a little bit to kind of like maybe overtrade if there was no setup there to try and meet that payout requirement, right? Because you have to obviously be in profit for that payout. So that's when I kind of like took a step back and just kind of trade a bunch of 100K accounts kind of separately. So if this account in 2 weeks is up 3,000, I can withdraw 2,400. If that 100K account is negative, it's fine. I'll just try and trade my way out of drawdown on that account down the line. If this 100 account has 2,000 profit, I can withdraw 1,800 on that bi-weekly. So, but I will say this: it is so much more in terms of like management, because you have to know, okay, this accounts for this accounts for that. This account, okay, is in drawdown. I gotta like slowly build it up.
Pros and cons. Right?
Yeah, it's exactly. It's pros and cons with everything. So you just kind of have
in between them.
Yeah. So you kind of exactly and switching between like the MT4 on your desktop or whatever. So again, it really is all dependent on what cons is like the least to you. So if like, because at the end of the day, it's like, for Kyle, it's much easier to manage. Yeah, right.
We're giving away the trade secret, man. That's why.
But like for Kyle, for him, it works best because it is so much simpler when you're trading one account. It really, really is.
Yeah, but like you said, like last year I was going through periods of drawdown. I'm in a drawdown period for like a month and a half. I'm not making any money.
Yeah, see, and that's it.
Do you have any that are like 8% drawdown, then 10% drawdown?
Yeah, they're different, right? But like I'll usually never try and get below like 2.5%. Like if I'm using, because like if you really think about the drawdown, like that's actually you're down 25%.
Yeah. Exactly.
So I think obviously in terms of if you have such a large capital pot like that, then obviously using the 0.25%, for example,
it's actually high risk. It's actually high risk.
So as I say, you could go 0.1, for example. Yeah, still a substantial amount of money.
Let's take a break for a minute there, guys, because I want to tell you about our lifetime sponsor, Smart Funded Trader. Smart Funded Trader is brought to you by myself, Life of Paladin, and Omar Agag. Just as I've taken over the podcast space, we are now here to take over the prop firm space. Smart Funded Trader has no maximum trading days. No maximum trading days. I know, it's insane. And that's how it should be. You shouldn't have to hit a target in a certain amount of time. So with Smart Funded Trader, you don't have to. You can take 1 month, you could take 6 months. It's no problem. The target is just 8%. 8%. Can you achieve that in 6 months? I think you can. So you're probably thinking about drawdown. So you have 5% daily, but a 10% overall drawdown. 10%, taking things up another level, as promised. You can also get max funded up to 400,000 with Smart Funded Trader. 400,000, and you can scale it to $2 million. $2 million. I'm blowing my own mind, I swear. So we only have 3 minimum trading days. So free on the challenge, free on the verification, so you can get funded within 6 days. With Smart Funded Trader, you can hold trades over the weekend. So whether you're a scalper, or whether you're a day trader, or whether you're a swing trader, it does not matter. We are here for every trader. Now, I know you're excited to be funded with Smart Funded Trader. The incredible launch offer that we're doing here at Smart Funded Trader is going to be 15% off. 15% off every challenge. As part of that as well, we're going to give 90% profit split for those who do get funded, as well as 125% refund on your challenge fee on your first payout. So the link in the description is below. Type in your email so that you can be the first one to know.
And keeps you in that game. Yeah. But no, it makes complete sense. And as Omar said, in terms of,
I guess as far as like monetary risk, like it's almost the same. Like if you have, a 600K account, you're taking 1%, that's like $6,000. If I'm doing it on like $2 million, doing 0.25%, it's almost the same as a monetary risk.
100%.
So let me actually throw a question out there. as well, because I actually wanted to pick a Kyle's brain and Paladin's brain as well, and even Riz, you can chime in as well. When it comes to the actual challenges, right? How do you guys approach them? Because I've talked to so many different traders, and I'll be honest, there's like one trader, I'm not gonna name who it is, but they're crushing it with like the payouts, passing challenges consistently, and they're doing like real good numbers. And I had a conversation with him, and he pretty much risks the full daily amount. So if there's a 5% drawdown, right, he'll risk like 4.5, obviously just to avoid slippage, and because you don't want to get like too close to 5,000. Then
What happens? What does he do if he takes the loss though? The initial loss.
yeah, I mean he'll just kind of like do the other 5%, assuming there's the 10% drawdown, because I know some firms are 8%. He'll just do the next 5% the next day.
Oh man.
Yeah, so he's good.
Giving himself too much.
Yeah, but
That's enough.
I will say this. But I will say this, right? Because like I don't want like the audience to kind of like he's in a better financial situation, and he's had multiple 5-figure payouts, so he's able to
Use
do
that as a business expense, right?
exactly.
Using
That's
that
how he
as
views it.
business expense because you get funded faster, right?
Yeah, that's his goal.
There's no minimum days, or you get funded faster. But for me, you know, like typically on phase one, I'm doing like 1 or 2%. If I go up, if I win my first trade, then you can do 2 or 3% and then pass it in 2 trades. And then phase 2, it's almost the same thing. I'm doing 1%. And then when I get funded, it's, you know, I try and deleverage. At times, like when I find an A+ setup, obviously I'm trying to hit a home run. But, you know, some of those home runs don't always pan out. Like the other day, I left 50K on the table just from closing it an hour too early. Like an hour too early, I was like, all right, I'm gonna go get lunch. I came back, I was like, oh, man, I probably shouldn't have done that.
Yeah.
But yeah, like just doing, for me, 1% is fine, because like 8R, you could, on a good week, like the market's really been choppy this year, so on a good week, you can do 8R. Like that's, you know, 2 or 3 trades in the bag. But I see like the stats, they don't lie. Like a lot of people are losing their account, right, in like 9-10 days or whatever it is. So a lot of people are probably not really giving themselves a chance to try and pass it. So I wouldn't recommend the 4.5%. Like obviously you could do.
Yeah. By the way, I don't recommend.
Sounds fun.
Yeah. By the way, I do not recommend this. I'm just saying stuff that I heard.
I mean, if you have an edge, like you could definitely do it. You know, like if you're waiting for that. The thing was, I recommend this. Is a lot of people would just be better off if they waited for the perfect setup and then pay for the account. You know, instead of paying for the account and now forcing it, like, I got to start trading this right away. You don't have to do that. You know, like you could pay for the account and let it sit there for a little bit and then wait for the A+ setup. But if you don't have the experience, you don't know what an A+ setup looks like. So when somebody asked me the other day, what does an A+ setup look like? I can't really, it's hard for me to tell you what it looks like, right? Because it's like years of experience. It's me watching, back testing and trading the same setups over and over and over again. It's hard for me to convey like what that A+ setup is. Like you kind of have to do the work on your own and figure out what your A+ setup is.
Exactly, yeah.
What's actually funny is there was one time in New York session where the market conditions were so perfect. Everything was beautiful. And I'm like, okay, I'm about to get funded again. I bought a challenge at that instant with a prop firm that allows you to get funded in 1 day. And I just ended up risking 3-4% of that trade. I started scaling on it, which I don't usually do on my funded accounts. I went aggressive just because everything was clean. And I passed the challenge. Price retraced back into an area to buy again. I bought it again. I got funded within that day. So if you see that the market conditions are really good, might as well just risk a little more. That's if you already have a safety net. That's if you have already a bunch of funded accounts, because losing that challenge is not that big of a deal once you do have a safety net. Because for me, a 400K challenge costs maybe like 0.5% risk for me. So it all varies with everyone. But if you're starting off and you don't have a safety net, it's always best to go conservative and build that buffer first. Then you can proceed to risk higher.
Which I think a lot of people probably don't have. They don't have the safety net, right? They're putting all their whole paycheck into this, and they're trying to hit a home run, like
100%.
I mean, a lot of people are struggling, right? So that's just the reality. Like, if you're struggling, try and find a way to boost your income first, and then focus on trading. Because, like, trying to trade these challenges will just eat through your pocketbook. Like,
100%.
It's gonna destroy your finances. That you're straight up gambling, right?
It's really sad to see how they have no safety net, they have nothing, and they're gambling on the challenges verification. And then maybe one day they got lucky and they get funded, right? The same gambling behavior goes to their funded account and they end up losing it. So
that probably ruins them even more.
Exactly.
So they think it's okay. I did it right. And they
I'll just do it again. Fund it again.
That's it. And it's interesting you say that, because what I gather is, as you said, like someone did 4.5%, right? And they have their A+ set up for them to then feel comfortable doing that. Plus they have that buffer, so it's not as much risk. So they got that financial foundation.
If they're running as a business, they just write that off as a
Exactly, yeah. But I feel like it's an interesting point because it's like on one side, it's positive, it's a business expense, and that's the right mindset. But then on the other side, if you haven't gotten to that point yet, yeah, so like imagine it's a straight line. If you're not here yet to be able to do that crossover into that side, then it's a complete negative if you have that mindset, because then these people who don't have the foundation will just constantly say, oh, it's okay. Oh, it's okay.
Yeah.
And they might pass one, as you say, but then have the wrong mentality. And by passing, it's like this positive reinforcement of it, this negative action.
So it's straight money management. You know, like the same people will probably get that buyer's remorse. You know, if they're like shopaholics, they're gonna buy something and regret it later.
Oh yeah.
Right. So like when they're paying for challenges and then blowing them right away, like they're gonna have that buyer's remorse. Maybe they're gonna go back in and try and do it the same day. You know, you could easily blow 10 accounts in one day. You know, easily.
I've been there.
Especially if you're doing the 4.5%.
Yeah, I will say this, right? Because like the person, I know we could talk about, like I'll say who it is off camera, but like that's the
Call them out.
nah. But I will say this, right? Like, because this person, that's why I want the audience to like kind of understand. This guy is getting 5 figures in payout. So if he's not doing a challenge where he can't afford to lose the challenge fee. So again, if he's doing, let's just say he just had a $20,000 a month in total withdrawals, right, from all funding companies, and then to the cost of, let's just say, 100K account is only $500 relative to that amount. It's very low risk for that individual. Mind you, that individual knows what he's doing. He's got his system.
We have to think as well. He only has to get a 1 to 2.
Yeah, exactly.
You know, he's passed, and you know, again, if he's doing an A+ setup for him, wherever that may be,
You need to have an edge, right? Like it's so easy to access right now. Like a lot of people just don't have the edge. Like build the edge first and then take the challenge.
Definitely. And in regards to that, then, like building the edge, you know, a lot of people, they do some sort of work. You know, they have like a confluence of this, especially with like smart money concepts, right? I got an order block. I got a premium discount. Oh, there's a fair value gap. Okay, I've had all 3 of those, and there's a break of structure. Let me enter. Would you define that as an edge?
No, I think the edge is mental. I think it is. Because, you know, if you put a trade on and you're nervous, right, and I'm not nervous, I have the edge over you, right? Like if we're playing one-on-one basketball and I know what I'm doing, right? Like I'm going to dunk on you, like I'm going to cross you over, right? Like I've got the mental edge, you know, or even if you have the same skill set, right? Whoever's got the mental edge is coming out ahead.
Yeah, my edge is basically when I get into a trade, I don't care if I lose, to be honest.
Exactly.
Because I know that over 10 trades, even if I feel 7 out of 10, if 7 out of 10 trades hit my stop loss and I hit TP on 3 out of 10 trades, I'll only be down negative 1% if I'm risking 1%. So that edge really helps me just trade with confidence, no fear, and it really helps me.
Break out the coin, man. Got it.
I'll say this, right? One of my mentors, Tom Dante. I'm pretty, and like he, one of the
Legend.
Yeah, it really is. I think honestly, I would recommend
We
everyone.
need to have him here.
Oh yeah, I wish. Like he's
He's
honestly,
in my DMs, man. I'll try and get him on. He's kind of been incognito, though.
I respect.
but he's honestly like I think if anyone wants to treat the business as a professional, like by far, and like by some of his content, he has a bunch of free stuff on YouTube. But I think he's the #1 guy in my opinion when it comes to like trading as a business. He has obviously experience working with like actual prop.
Keeps it so real. So
Yeah, and he said it too. Like the edge is actually in the trader, because what's the point? I've had like friends, right, who were not that skilled, but their mental was like they always respected their stop loss, their risk to reward. They understood, hey, if I bought, and they were trading retail concepts. Like if I bought this support, you know what I mean? I get my confirmation, engulfing bars, whatever they were trading. Like they were making money because they understood if I run it from here to here consistently over a span of time, I'm gonna make more money. And they were always stopping out. And they did everything kind of like their mindset was just like they knew what they had to do. They just did it, and they would make so much more money. And they weren't as quote unquote skilled in the sense they were just trading basic retail concepts.
Yeah, so like I talk with him. I hope he doesn't mind that I share the story, but when I talk with him, right, when he was trading at that firm, I think you've probably heard a couple stories where he was trading next to Nav. I guess he was a huge trader.
Yeah.
Right. He had mentioned to me there was this one trader on the desk, and I don't know what his name is. I can't share it. Like I don't know what it is. He didn't share it with me, but he had mentioned that this one trader, he had published a ton of books. Like he was a well-known person in the industry. But when he went over to his desk, he realized he was trading like one lot on the S, right? It was really small. It was like a micro lot, and he was losing his shit. And then there was this other trader on the desk that would go over to the risk department and ask for a bigger line because he wanted to size in. And you looked at his position, and he had like 1,000 lots on the ES, which is huge. It's a lot of risk. And he was like cool as cucumber. Right. So it's like a mindset thing, you know, like this guy was, you know, high profile, had the, had the big backing of the industry. I guess he was like a well-known author, but he didn't have the mental edge. So like he couldn't trade size.
No, I'd love to hear that. This is really good insight because, you know, the thing with Mr. Dante is by now I think that's like maybe the fifth or sixth person to mention him on the pod now. So it's like we should have a whisper.
No, so the interesting thing is he learned from James 16, and when back in like 2011, that's who I started learning from. It was mostly just price action bars like hammers and pin bars and outside bars, but he just has the mental edge, you know, and that's really what it is. It's just letting that edge play out.
I think it's like
Paladin said, you could have like less than a 50% win rate and still come out ahead.
But handling less than a 50% win rate, for example, isn't easy. I think it's that fight or flight response. If people are able to handle that, right, and maybe even not overcome it to a degree, but like be able to live within it, you know, so they're not actually having that response, which sounds like this author guy had that response and therefore couldn't handle it, versus this other person who was on the complete opposite side of the scale.
He does have it, he's managing it internally better.
This is why I've always reflected on the fact that servicemen and sort of veterans or people who've been in the army, for example, end up being quite good traders because they obviously handle that fight or flight response within a different area of life, and therefore they've built up this different mentality. And therefore, if they do reflect it, not everyone, of course, but when they do reflect to trading, I've found that they are actually better traders because they've, you know, compared to what they were doing before, handling a loss on a trade, no matter how big or small, is in comparison not very big much. I don't know, have you guys interacted with anyone from?
So I actually, big shout out to my friend Matt Mickey. He's an ex-combat vet. But he had mentioned, I mean, he's like extremely disciplined and he knows like processes and he sticks to them. Like he's a very disciplined mindset person. So when he's trading, it's all about back testing and looking at the statistics. That's really all it is. It's just a numbers game. You just have to be comfortable with the numbers and understanding you're going to lose X amount of trades, right? And he actually said he's like in personal contact with David Goggins. So we wanted to like try and see. We wanted to try and see if we could have a trader retreat at some point and teach David how to trade.
Yeah.
That would be awesome.
That would be awesome.
I'm just not participating in any runs. Not with David Goggins.
Goggins running it, man. Like
I woke up.
like I would love to do that at some point. Like kind of host like a Hell Week kind of for traders.
Oh, incredible! Yeah.
If they're down for it.
If they're down for it, I'm sure there's a select few, right?
Well, I think it would be an interesting challenge because it's something I was talking about in regards to running a business or being a trader or I had on the what was it, the CEO or the founder, sorry, of Funding Talent, earlier today. And I was saying to her how like everyone can have their opinion, and they can hate on you and etc. and say that, oh, if I was in that position, I would have done this better. But the reality is you won't know what you're going to be like until you're in that situation.
Yeah.
So like with the Hell Weeks, I could easily sit there and be like, I could do a Hell Week. No problem. It'll be hard, it'll be challenging, but I could get through that. Reality being though, until you actually go and do it, it's a whole different story. But that's the challenge.
Yeah, like I said in the past podcast, what David Goggins said, many dreams die while suffering.
Yeah, 100%. No, I would love to see that. I would love to see that. Make sure you invite me.
Yeah, just do it.
Make sure you invite me. Don't leave me alone, man. Yeah. But tell me, like,
do you want to just be on the sidelines?
This is what I say. Tell me 12 months in advance so I can train.
Yeah. So I think we all want to,
100%. No, that's amazing.
I would want to know at least in advance. I started doing ice baths. I've been doing ice baths. Like I'm kind of getting ready.
Kyle messaged me the other day. Where was I? I can't remember where I was, but he messaged me the other day and he was like, I'm in the woods. And I was like, what are you talking about? In the woods. That's what I sent him, like, in the woods. And he was like, oh, sorry, it's someone else. He was running. Yeah, getting ready.
Just training for that half marathon, man. Like, I was a distance runner back in high school. Like, I never ran more than like 3 miles straight, though. But like you were saying, like, you don't know how badly it's gonna suck until you're actually out there. Like the other day was like 95 degrees. I think I told you I went out there with nothing, like no energy gels, no water. I was like 6 miles out from my car and just realized like, oh man, I messed up. Like I should have brought some water. I was like looking at people passing me on their bikes. I was like looking at their water bottles. I was like pushing over.
Man, but how do you find, like, obviously you're doing this training at the moment, and what has that done for your mental?
Honestly, it's boosting my mental clarity like a lot because when you're out there, it's just you and your mind. You're just in your.
Do you have headphones or?
Yeah, I'll listen to music and stuff, but I think David Goggins is like, you know you're in the shit when you don't have any music and this is you and your thoughts, you know?
When I run long distance, I actually get the best thoughts. Like I start thinking of
No music though.
project
No music.
with music on. To be honest, like, I just ignore the music.
Yeah,
I'm just running and
Start fading.
all these thoughts start coming in, and I'm like, oh wow. And then miles go by, and then I look down, like, oh, 10 miles in, that's pretty good.
If Talon didn't mention it, he's trying to train for ultra at some point. So
I don't know about that.
and he told me you're gonna. So
Oh yeah,
we'll put money up.
money up.
Till the end. Did you ever do this? So like, I know you do training and stuff.
Yeah, no, I can't do like long runs, man. That's not.
Nah, you can.
No, I know I can, right? Cause I used to like I remember me and my group chat, we had like this little competitive thing like about a year ago, like try to run 40 miles in like 40 days, something like that. Maybe like in a month. I don't remember. But I remember like I never ran like an extended amount of time, right? But I remember like the first day I did 3 miles, then the second day 5 miles. Then I had to take a break because then my knees and like my ankles were destroyed after that, so I had to take a few days off. But again, I had never had ran 5 miles, and I used to look at other people who ran 5 miles and be like, damn, like I don't know if I could ever do that. So
I think once you start going,
yeah, that's what it is.
like the day after,
Yeah,
gosh, my knees been killing me.
exactly. But then but I'm more of a combat. Like I'd rather do like Muay Thai, just hit pads, spars, things like
Just
that.
training for the proper fight night.
Yeah, and proper fight night.
Just Christian. Cal's the promoter.
We're gonna make it happen, man.
I think we should do the retreat as the training camp, and then we'll do the fight.
Well, Riz, you said you're gonna sign up too. I think
I'm ready.
you'd be a great announcer, though. Honestly,
I'll do both. I'll announce it. If we had WWE, I'll announce and I'll get in the ring straight after. But no, I've always said I'm down for it because I just enjoy it. And I think at the end of the day, we're all traders, right? So you see the social media boxing, right? But then a lot of them are doing it for the money, right? Build money and
I think it would help build a lot of people's brands too. If we can post something and have all the propers out.
But this is the thing. I think we should do it for charity.
Yeah.
Because everyone, we're all traders. We're all making money. So we do it for charity. So there's actual, a lot of big cause being done there.
You heard that, guys? We're calling you all out.
That's it. We're ready. But I think it's going to end up happening. And I think the way that the space is going and with the whole social media influence boxing and stuff, I think it's going to happen, right? It's just about getting enough people to sign
Do
up.
MMA, man. 'Cause then
Oh, now that would be cool. Yeah, that would be cool.
That's a little brutal.
I would recommend not proud.
Yeah. We'll just find it out, We'll change an influencer's face.
That's what I'm saying.
Yeah, but it's good though. It's good fun.
Mess up your brain. Now you can't even trade anymore.
But in regards to, we were just talking about the discipline and the growth of doing something hard like running, for example. I know you mentioned the ice baths as well and cold exposure. Now nowadays there's a lot of like what people class as like fads. Like it's cool to do it, cool to say it, right? And then sometimes you get the backlash of other people saying like, oh, it doesn't do anything, or it's not going to change it. Right. In reality, obviously, you could do the runs, you can do the cold plunges, but if you're not fixing this or actually focusing on what is meant to benefit, of course, it's not going to make a difference in your training, for example. But the way I see it is like we're trying to learn how to handle chaos, right? So like I use the analogy of like boxing, for example. Like when you're boxing, you have to be able to think about your movement, your breathing, your defense, and your offense all at the same time. So if you can't handle that chaos, you're not going to win. You'll probably get knocked out or you'll lose. If you learn to handle that chaos, they're the best boxers of all time. So I've always thought of cold exposure, running, saunas, for example, as well. These elements of you forcing yourself into chaos and then being able to handle it. Is that, you've been doing it recently?
That's exactly what I'm talking about. The cold exposure thing is really just facing some adversity, right? And on the long runs, you're like questioning everything. You're like, why am I out here? Why am I doing this? And you just have to, rely on your mental edge to push you through. And like focus on my breathing when I'm in that situation and like my back's up against the corner.
For me, the cold showers. I've been taking cold showers this entire year. I still haven't experienced a hot shower yet. And the reason why is the chaos as well, but just sticking to what I said I'm gonna do. That's the main reason why I do cold shower.
Like, don't do it for social media. Like, just do something as a disciplined practice for 90 days. I don't think 30 days builds a habit. I think like something like 3 months will build a habit. But just do it for yourself and then see how it actually affects you. Right? Like even journaling, right? Like it's also something simple like that.
It's also very hard to take a cold shower when you're living up near Buffalo and it's just snowing. I come out from outside, come back in, I'm like, I be just waiting, like contemplating about taking this cold shower. I'm just like, okay, I gotta do it because I'm gonna do it, and then I end up doing it, and I feel good after. Like
I feel superhuman after, man. Like,
yeah.
I come out like ready to fight.
I'm out here like thinking I just want a UFC fight. I'm like, let's go.
Yeah, they're energized, But like, what do you, in terms of What was I going to say? Mine goes blank sometimes, yeah. I've been doing, this is my 5th one of the day. I can't handle it. But in regards to
Discipline. You're disciplined in doing this podcast. You have to eat.
yeah, forget to eat, forget what thoughts I have. It's not good. No, but in regards to that though, like,
Let me just stop you for a moment there, guys, because I want to tell you about our other sponsor, and I have partnered with, and I'm very excited to tell you about this one, TradeZeller. Now, as someone who's a trader and myself, I learned how important journaling is. Now, I only wish I had a software like this. Now, it is going to revolutionize the trading journey. I cannot wait for you guys to check out TradeZeller. TradeZeller is the most in-depth automated journal I've seen. You can now connect with MetaTrader 4 and MetaTrader 5. So it's available for everyone, whether you trade options or whether you trade prop firms or your own personal account. Now a task that everyone finds annoying, journaling their trades, which is yet so important. Everyone needs to journal their trades. They need the data, but yet very few people do it. Why? Because of the struggle. And that is what TradeZeller is here to fix for you. It goes into such depth into your trading and your statistics that you'll be able to see every element of your trading. If you want to have different strategies, you can create different playbook. If you want to be able to review a trade, you can actually replay it so that it will show you the price action as if it was live. You'll be able to see the best performing days, the worst performing days. The depth is unreal. I am extremely confident that even from the beginner trader to the advanced trader will find TradeZeller absolutely game-changing. The level of detail that it will provide you on your trades is insane. Even things that I'd never thought of were available on TradeZeller. Suddenly you're going to be able to see the patterns in what you can improve to be the best prop firm trader possible. That is the TradeZeller team, and that is why I am happy to be sponsored by them. Check out the code below, RIZ10, for 10% off your TradeZeller subscription. The link is in the description, and let's get back to the episode.
Twice, 50 laps, going once.
सिग्नेचर जो दूर से नजर आए
3,
सिग्नेचर जो सबकी सोच से ऊपर जाए
we have a final bid, 50 crores, sold to the gentleman at the back.
सिग्नेचर जो एक नया स्टाइल बनाए My style, my signature, a premium product from Dilbag.
you know, what you mentioned, I think is very powerful in terms of sticking to your word. You know, I think a lot of people come into this space and they're like, oh yeah, I'm going to do the work. But then, you know, 2 weeks in, they're just slacking, or 2 weeks, I've set this trading plan. 2 weeks in,
All the time, you know. Yeah, some people, like some close friends, are, I'm going to get into the trading thing. And it's been like months now. I'm like, hit me up whenever. Like, I'm literally at home all day long. When you could stop by my house whenever you want, man. You know? But, yeah, just stick to what you're going to say you're going to do. Because I noticed that with myself. It took me longer than it probably should have to find profitability, because I was saying I was going to do these things and not do them. Right? And then I just got so fed up with it. I was like, all right, this is it. It's make or break.
Yeah, I only started following my trading rules once I went through all that pain when I didn't follow my trading rules. So yeah, so when I start to break my rules or think about it, I just start thinking about all the past experiences, and then that just stops me.
Yeah, and honestly, like I remember because last year was kind of the turning point year for me personally, and it's so weird because like even prior to that, right, the year prior in 2021, bro, I had the skill set. Like it's so weird. I think most people, and you guys can kind of like talk about it as well. I think most people have this skill set, right? Because I know in 2021, bro, like I used to call in my group chat, like with my friends' chats, we used to like, I'll be like super accurate on the direction. I even like talk about like, yo, price is going to bounce from here. And then like, then I look at my P&L and I'm down on the day. And like, and again, that's why I really like Tom Dante, because a lot of the stuff that he was talking about from his own experiences, from other prop firm traders that he was trading with, they had similar experiences, like where there will be someone who's really talented but can't make any money. And it goes to show like there is something in terms of just sticking to your word, right? Confiding in yourself and understanding like, listen, if I set out a game plan of what I'm going to do every single day, do it for an extended amount of time until it becomes that habit, when it becomes a lot more natural to do it. Because our first instinct sometimes, right, is to revenge trade, right? Because you're down on the day, then you go on Twitter, and then this ex trader is up like $10,000, and you're like, oh my god, and you're looking at your P&L and you think you suck, and then all these like internal dialogue starts to kind of come out. And even now, like even like finding consistency last year, and having a few payouts this year, right? This year a little bit more difficult because the market has kind of been a lot more choppier than recent past in terms of like not as much trend, so you have to be very picky. But even then, the internal dialogue it's a constant work in progress. You don't just wake up one day and boom, you know what I mean? Like, you really have to kind of stick to what your word, and then once you kind of view your word as like the gospel, right? Where it's just like, I'm gonna do what I say I'm gonna do. I really think that's gonna that
That's like
ultimately
the
helps.
breakthrough point. Like,
Yeah.
that's when your trading takes like a U-turn, and then you start doing the things that you practice or know that you should be doing, or like sticking to your risk management plan. Like, a lot of people just can't be disciplined enough to stick to that.
Yeah.
Right.
Do you like break it up into different parts, if you know what I mean? So like, as you mentioned, like risk management, maybe your technical ability.
Honestly, like when I was studying, I probably should have. Like, I probably should have focused on one area. But when you're first getting into it, you're trying to focus on everything. Because you have to be a well-rounded trader. You can't just lack in one area and then be great at it, in something else, right? So a lot of people are just focused on too many things all at once, so they're trying to learn too much all at once.
For me, I made the mistake of thinking that technical analysis is everything. So I spent 2020 the entire year just studying ICT concepts all day from the moment I woke up till I slept, thinking that's what's going to make me profitable. Only till I started learning about psychology, started learning from Mark Douglas, was I able to actually be profitable.
Yeah. I bring it all up all the time because I was around like when Forex Factory was like the only resource. There was no psychology thread on Forex Factory. Nobody's talking about mindset over there, trust me.
Yeah, and again, that's when I referred to before, like about 2021, and even like towards the end of 2020, after I took, we talked about WWA's course content, and integrating some of that stuff with like ICT's concepts, and then like the skill set was there from 2020, but I didn't really start to see any consistent result until the end of 2021, going into 2022. And why is that? It really does boil down to kind of just not following the plan. And I actually wanted to like kind of hear from Kyle Paladin.
Part of that too is like getting access to capital, right? Like,
you know what,
getting access to capital is a huge thing, right? Like, because you honestly want to take that 5K to 100K.
Exactly.
Like, you do. Everybody out there that's listening right now, like, I've been there, and it's just, it never happens, because trying to turn that 5K into 100K is going to take you 5-10 years. Like, it takes a long time to build up and grow that capital. So for me, like, huge shout out to the prop firms. Like, if I didn't have access to the capital, I don't think I would be here, like, straight up, because I was the guy trying to apply to like S&B Capital and Jane Street, and if you don't have a 2-year track record or some type of like master's in finance, they're not even looking at your resume, like, straight up. So when you're, I guess this is a message to all the traders out there, like, put yourself in a position where, all right, I actually have a really solid resume to take this funded challenge. Like, I deserve this now. Like, a lot of people probably have a terrible resume right now. And they're trying to pass this funded challenge. Well, you're never going to get the job,
Yeah.
So just really, like,
I've always said trying to flip a small account to like 50, 100K is unrealistic.
you could do it if you're willing to risk the money.
Yeah,
like, if you have the money, right, if you got 250K in your account.
But most don't.
Yeah, exactly.
That's the one.
Most Americans don't have that, right? So
I think it's just pushed because of these fake trading influencers. They're trying to show like, oh, they're crazy. They can flip these small accounts to big numbers. And they're willing to lose that money.
maybe
They don't show negative.
maybe they are. Maybe I'm sure like the top 1% of people probably did do that, right? Like,
But I'm
there are people that did flip a small fortune into like massive amounts, right? Like a Larry Williams, like that guy, I think he turned like $2,000 into like $2 million. But that's like
That's like
1% type of person. And you can't like assume that you're gonna be able to do that.
Yeah, and I always talk about like not just in like trading, but in like life, right? You're always gonna have like people who are the anomalies, but the people try to use the anomaly
Exactly.
as
Bell curve.
standard.
There's the bell curve.
Yeah, exactly.
They think, all right, this guy's done it. Somebody challenged me, and I was like, it was like a 1-year challenge, right? And they were like, why don't you just trade your own capital? Why don't you just trade your own capital? I could do it, like. And I said, well, why don't you try and take that $5,000 that you would have taken and try to flip it into like $50,000 in a year, right? Or do it in a prop firm. Like, come back to me in a year and see how it goes. And I'm still waiting. I use like the Remind Me bot on Twitter. I think it's December of this year. I'm gonna follow back up with that guy.
He's coming.
Coming for it, man.
Has to be done here. It's just
I mean, like the opportunity with prop firms is it's huge.
Yeah.
Like they're giving you leverage, right?
Seriously.
And if you lose the account, you're not losing any money as long as you get the refund, right? Like you could trade really small, get the refund, and then swing for the fences. Yep.
I have a question for you, J-Cap. With a smart funded trader out, one of the best prop firms with unlimited trading days, 10% drawdown, raw spreads, what would you recommend adding to the prop firm?
So a lot of people like request futures. I get a lot of questions about futures, but so right now, I was trading futures, but the maintenance cost on them is high.
I saw you mentioned.
So like, if you're not making that, right, it's, I'm trying to trade like a big line. So I needed like 10 of those accounts because they're only giving you like a $3,000 drawdown, right? So if you got 10 of them and you got 30K, that's, it's a decent amount of drawdown. But if you're paying $20,000 a year in just maintenance fees, right, that's a lot of money. I don't know if it's like the data fees or what. But as far as like, I guess Forex, like the no time limit thing is good, but the statistics do show that it doesn't make a difference, right? So, I mean, it's a very good feature for people that have an edge because not every month is going to be great. Like if you lose the account, you're trying to trade in the summertime, right? Summer volatility is terrible. Or around like holidays and stuff, like, December's pretty slow. Even around Thanksgiving is slow. Beginning of the year is slow. So having the no time limit thing is great. And there's another firm out there, I won't mention their name, but they're doing like an increased max drawdown limit. So when you hit the scaling plan, right, they're adding a percentage to your max drawdown. So I think it gets up to like 20% that you can possibly have as a max drawdown. Other than that, like, I think transparency is a huge thing. Like, and huge shout out to Angelo because he talks about, like, I met with him over the weekend and he talked about like how they're actually operating with their A book, B book, like how the spreads are being simulated in phase 1, phase 2. Like, and, it's legit. Like, we, as funded traders, like, we want to know, like, that our livelihood is still in good hands, because there's probably a lot of people out there that are trading full time and are relying on these prop firms to pay their bills, right? So obviously regulation, you can't stop that, right? Yeah. So I guess my thing is, I kind of want to see a trend towards like previous like brick and mortar firms where they want to see the top traders succeed. Like instead of kicking them out of the firm, like maybe they just have a chat with them, like if they go down 2.5%, well, like Tom Dandy was saying, like they would just pull you into the risk department and have a sit down with you and they'd tell you to size down. That's in my opinion, that's a real legit prop firm.
It's a very interesting point, actually. Very, very interesting point, I think, because I've not heard that before, in terms of, having sort of advice given, say, look, we recognize this trait, from your experience and from the data that we've seen, here's some advice, tone things down, etc. I think that's a very, very powerful point, actually. We don't see that in prop firms right now. The prop firm space is very, very interesting. As you say, there's a lot of innovation going on. I think obviously with the smart funded trader, it's going to set a new tone, definitely, and I think it's going to be good for the space because I think competition breeds innovation. And innovation, for the customer, if you will, the consumer, they're the ones who get the benefits at the end of the day because through that innovation, it's like originally we had just FTMO.
Yeah.
Then you had funding talent come along, which was very interesting because even though what happened to them, and I said this on the podcast with Jessica, I said, it's actually probably a benefit to the industry, even though it wasn't a benefit to you personally in terms of Jessica. Obviously, it was a huge negative and probably a very hard time, but it's kind of that had to happen to someone for the industry to learn.
Yeah. Right? Like Angelo was saying, they don't A-book every trader. Like, they just can't.
Yeah, they can't.
Exactly. And, what she expressed in that interview was that she listened to the traders' sort of feedback and tried to make it as best as possible for the traders and just kept it as a demo simulation. Meaning there was no spreads, no commissions, no slippage, and there was no minimum days. I think there were still maximum days, but they made it very, very easy and good, which only what happened was when they did that, and she explained it, is like within, I think she said 2 weeks, their payouts doubled, right? Because people were able to game the system and stuff. And therefore they shut down. Yeah. Right. And things happened very, very quickly after that.
Well, I think the end goal for a lot of prop firms is like they want to e-book some traders, right? Because they want to run their own strategy. So like, what does that end goal look like? Like, find the great traders and help them out, And if they're going through a struggling period, don't let them just struggle on their own, right?
No, I love that.
One thing I've noticed with the prop firms that have no minimum trading days is they go under the prop trading, funding talent, It's a pretty cool observation.
I think it's good.
So does your firm have no minimum trading days you mentioned?
We have
Yeah, so it's 3 days. So it's like so just for like to avoid anyone who kind of just comes in just wants to just like over leverage right away and stuff like that, because that's the whole point of the smart funded trader. We want to find, because like Angelo said, right, you ultimately want to find someone who's able to maintain consistency, which is why a lot of these platforms have those VIP programs, because they want to incentivize. And we have our own VIP program as well, but it's just to ultimately incentivize traders to kind of kind of weed out everyone who's not consistent, because people can get payouts and still not be able to book them because they might be too high risk, right? They might not have a steady equity curve. This guy might like one day just be down 3 days, 5 days in a row, and then one day just make it all back because he or she over.
So I think you guys should just take the leaderboards off. If you were thinking about having a leaderboard, just take it off, in my opinion, because it's kind of breeding like bad habits. I mean, if it's your decision to leave it up there, like that's cool, but I mean, there's traders out there that are doing crazy percentages, but to me, it's just not realistic to try and do that every month.
I agree.
Well, what's the classic
Right,
thing?
like that's the bell curve. Like that's the outlier.
Exactly.
Looking at the outliers.
But the thing is, like, even then, how many times do we see the same name on the leaderboard?
Yeah.
Right? They always say that the firms have said so far that people who make it on the leaderboard normally blow their account the next month, right? Or the second month.
I used to go on. I think FTMO doesn't allow you to look at accounts anymore. I used to go on FTMO's leaderboard, and I mentioned this with
You can
Punch, and I used to go in there and look at the trades that they were taking.
Oh, you could do that.
Oh yeah, you could have, like back in the day. They don't. I don't think they took it down like with a feature, because they used to do YouTube videos. They used to review people's accounts and like, all right, this guy's doing this.
Hello, I'm back. So let's pause the podcast for a bit. Okay, so I was expecting price to give a retracement and going up, but it took this equal highs as we expected. So price went as we expected, but it didn't give the retracement. So what does that mean? It means price is a bit aggressive prices. So the order flow is, it took this fair value gap and went again. So let's go to the 90 minutes. Then we will get a clear picture. So the 90 minutes, let's took from here. Let's go to the 13 hour, 6 hour, and 30. So it's 90 minutes fair value gap. What's the time now actually? So there's a half an hour more to close this candle. So let's go to the 60 minutes. 60 minutes pretty bearish. So there is another thing I noticed. Is this a buy model? Where is the buy model? Can you spot it? Hold on a second. Can you spot the buy model here? Market maker buy model. Original consolidation. Distribution. No, accumulation. Smart money reversal. Low risk buy. So looks like this is a buy model. Let's see for confirmation. If the price close in half an hour, price close strongly above, we can confirm that most probably. So there is a possibility that price may take high, but I don't have the confirmations. So let's see. Let's wait for the candle closure. Okay, let's wait for the 1 hour. Let's wait for the 1 hour candle closure. Okay, hold on a second. I'm getting a lot of typo, so let's see. This is pretty much aggressive. The price is pretty much aggressive, making a fair value gap. But for that, we need to confirm. We need the closure of this 1 hour time frame candle. And if we go to 13-hour time frame, see 90-minute. Yeah, so let's wait for the 1 hour candle closure. So that's it. So let's go back to the podcast. Thank you.
Can't trade with a 10 pip stop. I don't know how people do it. I'm doing like 15 to 25 pips.
Yeah, and that's what it's actually interesting because I was talking to a friend of mine and she was saying the same thing because she has like a little bit of wider stop and she doesn't experience any of these issues. And now I will say this, right? Because I think ultimately people just want like kind of an out. It's like, hey, I want to blame these conditions versus that
External thing.
Yeah, and then I will say this: if you're someone who wants to trade, like super tight stop loss, and maybe that's your edge, maybe someone has, someone's able to do that, and they're like a scalper by nature, right? Just find the prop firm that has raw spreads, and even if the commissions are a little bit higher, if you have raw spreads, commissions might be a little bit higher, and you're not really getting slipped, right? Outside of news events, which everyone should already understand the risks when trading news. Then just find the prop firm that kind of suits that, or find a broker that suits those types of conditions. Don't go to the most popular broker, the most popular firm, and then when they have a little bit wider spread, and then you start complaining, because of that. If you know you need a tight stop loss, then just go to there's so many firms out there that have raw spreads that you can kind of look around, find credibility. I know we're going to have raw spreads as well. So just find a firm that aligns with the things that you want. And don't just always, blame. Be so quick to blame.
Part of that is understanding like your model and like what you're actually looking for. Like,
exactly.
Am I actually a scalper? Like if you're not a scalper, you don't really need to be at that prop firm.
Exactly.
A lot of it is like you understanding what your model is and like finding the firm that fits you. Like if you're a swing trader, you shouldn't be going to a firm that doesn't allow overnight.
Exactly.
Like with the futures, I think pretty much all the futures firms right now, they don't allow any overnight holding.
Yeah, for me, I just stick to the same.
It's interesting to me.
I just stick to the same 4 or 5 prop firms. So I know each prop firms, which one has bigger spreads, which one slips me. So I never had any problems because I know what each prop firm consists of. That's why with the funded, that's why
do your due diligence. There's a lot of people beefing on Twitter about some rules that are clearly shown on the website.
Yeah, I've seen that.
Like,
yeah.
The world that I came from, construction, right? I'm reading like 50-page contracts, and like if you don't read that contract, you're gonna get taken advantage of. Like contractors got taken advantage of all the time because they missed something in the contract. You're gonna lose $50,000 to $100,000 because you didn't read through the contract. It's a little thing, it's an extremely small thing, and dude, it's like a 3-page contract that you got to sign. Like you could read through it quickly, or just read through the pages on the spreads and everything, the rules behind it. It doesn't take that long.
Yeah, actually, one of my students, he lost his entire funded account because there was a rule where if you don't trade for 30 days, they take away the account.
Oh wow!
And yeah,
it's a thing. Yeah, a lot of firms have the 30-day inactivity. Are you guys gonna have that?
For the inactivity rule, like not on the funded accounts.
Okay.
So on the challenge, even though it's like no time limit and stuff like that, but usually all you have to do is place like a 0.01 lot, because the thing is this, right? It's not because we could potentially remove that like down the line as the firm like launches and stuff like that, but there's a cost per account per month that's upon the firm that gets put on. That's why like some firms do have that inactivity rule, but then as the firms kind of like cash flow, then they can kind of remove that because they can take on more expenses. So, but in the beginning, obviously, you kind of have to cash flow properly, and then make sure from a business perspective where, now we can incur those costs, because there is a cost with every single month that goes by for every single account. So someone just said, you know what, screw it, or like something happens to that person, they gave up
it's an unnecessary expense that you guys are paying for.
Yeah, exactly.
But so like with a lot of those firms though, it's in the website too. Like if you are not going to trade for 30 days, you can just reach out to the support and let them know, and they'll put a pause on your account.
Yeah, exactly. And that's the thing too, like we want to make sure like that's the whole point of having like the Discord where people can come in and ask questions. You know what I mean? Like we're not going to be bothered. We have a whole support staff just solely for that. And again, man, we just want to make the customer experience. That's the number one thing, right? The customer experience when they come in, because we know what's going to happen. A lot of people are going to come in and they're going to lose their accounts.
Yeah.
That's just an inevitability.
Yeah, it's gonna.
You want them to at least experience, like, you know what? That experience wasn't too bad because the spreads were good, execution was good, the servers aren't freezing every 20 minutes.
The rules are clear.
The rules are clear. And then that's the problem with people. You can't like satisfy everyone. I saw this situation on Twitter you were talking about where like someone
they want to be
was complaining about
something like the work. You know?
Exactly.
Read a little bit and make sure, because you're taking a risk at the end of the day. You're paying for something, like you want to read the rules through.
Mm-hmm.
Otherwise, you're gonna think it's a scam when it's really not.
It's like the people who like someone else traded my account, and it's like, how to happen? Yeah.
Like I remember with TFT in one of their discords, like almost like 6-7 months ago, like someone was saying in the chat that they were like, oh yeah, I'm trading this, and then my friend's trading it the other day, you know, and like it clearly says that you cannot have multiple people on one account. And when they kind of like, you know, kicked out the trader, people are like, oh, it's a scam. But it's like, no, you guys in plain sight were telling the owner. That's the crazy part. And but like you can't be upset because it's all in the rule sets. Like, and I understand some like traders are going to be like kind of like upset about that type of situation, but you guys have to understand like there's a reason why that's not allowed. There's like stuff behind, you know what I mean? So, and again, it's a simple thing, like just trade your own account. You know what I mean? You can't have two people trading on one account.
So I had a student who was trading, and they kept doing a trade copy. Basically, he had an employee, and he would give him the trades or take the same trades together at the same time. And obviously, they're on the same internet, whatever, and just track the IP addresses. And they kept getting kicked. It happened twice to him, and he got kicked off. Like, he got unfunded everything. They got
well, it's actually in the rules, because I've looked into it a lot, because I'm copying to all my accounts, or because I'm managing it all the same, right? And it's in the rules that you cannot have it, as long as the account's under your name, you could copy it. It's fine.
Yeah.
But if it's not, that's why if I'm going to run an education service or anything like that, I can't do live trade calls. Like I'm not going to do entries. I'm not going to do stops or targets.
I've seen that a lot on your live stream talking about it because it's like
I'll forecast and I'll tell you which direction I think the market's going to go. But if they find out somebody else is, you know, using my
what happened with FCMO, didn't it?
Yeah.
And 4 or 5 traders
was telling me, they were going to pay out. I think they were owed like $750K. Yeah,
they got like 20% of it, 10%.
I don't even know if they got that.
I think they got an offer, but they might not have taken it. Yeah, I think they got offered a smaller percentage, but then they would like kept finding
what that percentage is.
Yeah,
we should ask Angelo.
He has the answer.
Yeah. Maybe he does. I don't know. It's FTMO.
Yeah, that's true. Yeah.
But that's why these firms, that's why they have max allocation, because they could. It's people think that these prop firms are like trying to like screw traders over, but the reality is this: there's risk behind the prop firm, and there's risk again. They don't want to put too much backing on one individual strategy. So like
that one trader could bankrupt you.
Yeah, and that alone too. Like if you want an A book and stuff like that down the line, you have to like having a multitude of strategies that are kind of being implemented is typically most ideal. Even like the brick and mortar prop firms, right? Like SMB Capital, all these other, they encourage traders to kind of have their own playbooks and their own rule sets because it allows the firm to be less. Exactly. Because you don't want a bunch of like I remember one I think it was 7 Points Capital or some equities firm. They were talking about it on the podcast where they're like one day they have a ticker that shows up and everyone's going short, and then when they look on the risk. When the risk appetite is looking at it, they're like, yo, why is everyone going short? We have to deleverage.
It might have been one of the Chat with Traders podcasts.
Yeah, it was definitely on that podcast. I forgot which it wasn't SMBA. It might have been 7 Points with Mike Katz or someone. I think that's his name. But yeah, and those are the real like risks when it comes to, you know, the business model of having like a prop.
That's it. And I think people, all they have to do is just not even do research, but just have an open mind of understanding what business is, you know, and trading as well. You know, and understanding the different strategies, because obviously everyone gets so caught up on trying to, you know, claim like I'm an SMC trader. They spend that much energy doing that they just forget that it doesn't matter. None of that matters.
Yeah, you know, and it's trading the same price. Exactly. We're all trading. Linda Rash, she's a legend. She's trading like Bollinger Bands. Right? It doesn't matter what strategy you're trading. Like we're all trading the same price.
That's it.
Just remove everything from your chart. We're just trading the same price.
Well, the thing is that you were saying earlier, which I wanted to touch on, was like your stop loss size. You know, below 10. You know, and above 10.
Well, above 10,
you know, but you don't go below 10. And you know, so is that have you got like an average? Like,
like 15, 25. It depends on the market chart. Like some days are like crazy. Like obviously, if I have to use like a 50-point stop loss, I'm probably not going to take the trade though.
Yeah, same exactly here.
Wasn't actually.
I don't pass 30 pips for EU and GU. I just stay between 15 and 25. If it is past 50, I'll just lower it down to 30 and take that risk.
Yeah, see, that's what I mean. Like, there's surprising traders out there that they think they could get away with like 7 pips, 8 pip stop losses. That's tight because the brokers can open up a spread on you, right? And like, even when you get filled, like you might be down 2 pips right off the bat, right? Same thing, yeah, the slippage.
Yeah.
Well, what about yourself?
Yeah, so honestly, me personally, I'm more comfortable around that 10 to 15 pip range as well. But I would primarily just trade EU, UCAD. GU though, like sometimes
UCAD, I hate you.
Yeah, I'm not. You know what it is? I started to have an affinity for it after I've been trading with one of my friends. And yeah, I just realized with UCAD, you have to kind of anticipate a deeper retracement than usual, like compared to other pairs. I'm starting to get a little bit like more comfortable with it. GU though, like those stop losses are typically over 20 because GU just the volatility of GBP. But again, it might be a 20 pip stop loss, but you can get 60 pips relatively easy. Yeah, because exactly
your lot size.
Exactly.
That's why I trade all my positions are just open up on TradingView because it just automatically calculates the lot size for me.
Okay. So what do you think to like these people doing like 2 pip stop loss, 3 pip stop?
This is ludicrous. No comment.
But let's talk about another thing then. So like number of pairs. I know you said you only trade 1.
No, I trade a little more than that.
Okay.
I'll trade the majors. Anything correlated with the dollar.
Okay.
Yeah.
Okay. Is it one at a time?
Mostly, yeah. It's one at a time. Yeah, I'll trade the dollar yen. I'll trade dollar CAD. I'll trade the Aussie. I'll trade the euro, the pound.
So will you not have like a trade on EU and dollar? Okay, so just one at a time.
I used to do that. Like when I sat down with ICT, I told them when I thought the dollar was going to go one direction, I was opening up positions on
correlation
everything. Yeah, and it was.
I used to do it.
The funny is, I think me and JCab have like the exact same trading plan.
Sounds like it.
It's simple,
How many
man.
pairs do you use?
Simple.
It's
I just think just the majors, 15, 25 pips, EU, AU.
You're giving away too much now. Now that you have the correlation, that's too much.
Yeah, but I'll watch like SPY and BTC with EU and CAD. I'll occasionally watch GU. I don't know what it is, GBP. Maybe it's like a mental thing. No, I just I just like EU because it might just be a mental thing because I started out with EU when I first started trading because with ICT he always like kind of preached sticking to one thing just to get more comfortable with it. So EU, maybe it's just because I built that kind of like bond, so to speak. But yeah, I'll trade S&P 500 even though I don't really like to too often. I'll take it on the higher time frame. I don't like refining my entries just because.
You do ETH as well, don't you?
Crypto is all higher time frame, like daily, weekly, and then
I'm kind of trying to get into crypto more too, but I noticed like they're better swing plays.
Exactly.
Like, it's hard to day trade. Maybe probably because the liquidity is low, right? I don't know, for whatever reason, like the swing trades seem to pan out better.
No, they 100%. I talk about this with one of my friends. She says the same thing because she says whenever she sees me trading BTC in our group chats, my entries are always. It does not go below the H1 because with crypto you need a little bit of room.
I think not only that, the spreads are high too.
Well, if you go with True Forex funds, their spreads are 0 on crypto, but their swap is insanely high, insanely high. So, yeah,
well, something to look into.
Yeah, but I'm not gonna lie, with True Forex fund, like that's why I like them the most because their spreads are like super tight, across the board. So not just with like Forex, but also with indices and crypto. You're not beating those spreads. There's a new
firm out, Crypto Fund Trader, but they have their own like platform. It's like the web-based platform. It's like a Bybit almost, where it's like an online exchange almost. But I was reviewing it the other day, right? I tried to go on. They had like a demo login where you could like sign in and check it out. I signed in and like none of the quotes were loading. I was sitting there for like 5 minutes. I was like, all right, this is not looking good. Yeah. And it was like right around Asia, and I know the crypto markets are active during Asia, so I don't know. I think I'm gonna try to do that challenge just for my followers, or maybe I'll do the True Forex funds. But I'm trying to dive into crypto a little more.
Yeah,
I haven't had any luck with like SPY or ES.
No, yeah, we talked about it.
Like for me, the correlation is like the dollar. So when I think the dollar's going one direction, I think the index is gonna go one direction, but it's not like that.
I hate correlated.
It's highly uncorrelated. Well, not highly uncorrelated, but I think usually it's correlated. But I think now, because it's uncertain times that we're in, it's not moving 1-to-1.
100%.
And that will mess me up.
And it's kind of like positive drift, right? Like
yeah. And that's what this in terms of correlation. I know you just said that you don't like correlation.
Yeah.
That was the one thing that like always would get me so aggravated back in the day. EU DXY is probably the most correlated out of everything, but it would get me so mad. Like I'll be in GU longs and DXY is like dropping, and I'm like my GU is consolidating. But I know there's correlation with euro pound and all this stuff, but it just got too much. That's another reason why I think I just cut out GU and just kind of just locked in on EU.
Euro has like the highest correlation with
Exactly.
90-something%.
Exactly. So it just makes me more comfortable. Because if I see something on DXY that's very obvious, now I know, okay, I have a directional bias on EU.
That's funny you mentioned like dollar CAD though, because I find that that's not really.
It's not, yeah, because of oil.
Yeah.
Yeah, it's a little bit of an annoying pair, but.
So you follow oil too?
Yeah, if I'm looking for a catch rate, I'll typically watch oil, and then yeah, because obviously they're inversely correlated. So if oil's tanking, but then DXY is tanking, then good chance UCAD is gonna keep going sideways.
Yeah.
So then I'll just avoid CAD that day.
What do you guys think about gold? Because no one's mentioned gold yet.
Yeah. So Angelo was actually talking about that because he mentioned like he brought it up because we're like obviously we've been in a period of high inflation, so you would think gold like ripping hard, but it's going up, right? But it's just slowly. You would think that it's like up like 100%, a lot more than
New all-time highs, everything was not.
I don't really trade gold. I mean, it's stable. Like again, like if you're gonna trade gold, I think it's better off if you're like a swing trader.
Interested.
Yeah, for me, I made the most amount of money with EU and G. So I've just been sticking with it since. Like I don't need to add any.
It's not broken.
Have you seen like the stats? A lot of the stats is that the most traded pair is gold.
Yeah.
In terms of, doesn't mean obviously most people lose.
Yeah,
Correlation.
maybe that's why.
Because I used to try and trade gold, but it's a dangerous game with that one for me anyway. But then I also see people who do really well with it. I think it obviously comes down to your sort of like tolerance of volatility.
Exactly.
But how much can you speak to? Obviously, you know your pairs. Like you have your specific pairs that you look at, and how does that work for you? Does it actually really benefit you just knowing those pairs inside out rather than constantly changing, having such a basket of trades?
Yeah. Honestly, I think when you get really well versed in the market, you could trade anything. It's just where do you want to focus your concentration really?
So when you first started getting that consistency, were you still sort of trading all of those?
No, not really. I kind of narrowed it down a little bit.
I tried trading with a bunch of different pairs, but then sometimes I'll miss a clean setup on one, and that's the problem. So I just started focusing on just a couple of pairs.
And I've got I got some big screens. Honestly, if you're trying to follow multiple time frames, it's hard to follow more than like 5-6 markets.
What's funny is like 70% of my trades are just for my phone because I know EU, GU, DX are in the back of my head. I got the higher time frame. Those are my pairs. So I just go on the lower time frame on my phone and trade off that. I don't recommend that, but that's what I do.
Are you looking at higher time frame like on your
I know what the higher time is because those are my pairs. I only look at those 3 pairs.
So you already know what daily levels you're looking for.
Exactly. I could picture the chart right now of EU in the back of my head on the higher time.
And I know there's a lot of people out there that are probably trying to trade from their phones because they're still working a 9-to-5 job, right? They're at their job trying to trade off their phone. I mean, just set your levels the day before and know the levels that you're looking for intraday.
Yeah, and also the more pairs you trade, the more trades you take. Yeah. And with that, the more trades I take, I start getting messed up. Like psychology is not there, so it's better just.
Some people can do it though. Some people can kind of manage like a whole portfolio and say like, all right, I'm long in the euro, but I'm hedged over here.
I get mentally fatigued after a couple of trades. I'm like, I'm done. I can't take off.
It's like the anomaly you were saying earlier, like there are going to be those people who can just manage all of this information and this data and be able to handle it.
No, he posted a really good Instagram reel. I think there's a reel the other day.
Hello, I'm back. So, price, this candle disrespected this FEG. This FEG, actually this is in 1 hour. So, let's go to the 90 minutes. 90 minutes. This FEG is tracing. So, let's go to 1 hour. 1 hour, it disrespected this FEG. There is another FEG here. Let's go to 3 hour. Let's go to the 4 hour. 4 hour disrespected this FEG. So most probably price will be playing out this market structure buy model. Most probably. So if we follow the order flow, there is an FEG in making. Let's go to the 50 minutes. 50 minutes, it took the order flow. uh, smart money is there, 5. So this order block, select that. So this is going, price is going up, and again it may come back for 1 hour FEG filling. So our buy side liquidity is here, is this high. So let's see how it plays. Let's see how it plays out. It's respecting this order flow. $30 minutes. 30 minutes, no FEG. $30 minutes, no FEG. 30 minutes and an untapped FEG here. So let's see how it plays out. Most probably it will take this high here, buy side liquidity. Let's wait to see a tap here. So that's all for now. Let's go back to the podcast.